Candlestick patterns are often praised as the secret to mastering price action, but they can be a significant issue if not used correctly. Most traders treat candlestick patterns like magic spells, expecting miracles when they are used correctly. However, in the real world, they only work when combined with context, confirmation, and brainpower. In this video, I'm going to show you 3 reversal candlestick patterns that still work when used the smart way. Instead of trading off random shapes, traders should learn to use patterns with precision in real trading setups, backed by structure, trend, and logic. If you happen to find value in this video, please don't forget to hit the like button, subscribe, and turn on the notification bell to get notified when we upload a new video. Now, let's get started. One of my favorite candlestick patterns is the hammer candle. This is a bullish reversal pattern that typically forms after a price decline. You'll recognize it by its small candle body, long lower wick, and little to no upper wick. That long lower wick tells us something important. Sellers drove the price down, but buyers came in strong and pushed it right back up near the open. Ideally, this wick should be at least twice the size of the candle body. Now, when you spot a hammer forming, but especially with other confirmations in play, you might be looking at a solid trade opportunity. Now, in the opposite side, the shooting star is just as important as the hammer candlestick. It's the bearish twin of the hammer and appears after a price rally. Visually, it's the opposite. A small candle body, long upper wick, and little to no lower wick. That long upper wick signals that buyers tried to push higher, but sellers slammed the price back down, rejecting the move. For a valid shooting star, make sure the wick is at least twice the length of the body. This setup often warns of a possible reversal, but again, context is everything. Let's see how this looks in a real trade scenario. First, we identify a key resistance level, an area that used to act as strong support. Price had bounced here several times before finally breaking through. When that happens, we look for the old support to flip and act as resistance. At first, price tested the level and dropped, but didn't give us a clear entry based on candlestick signals. So we wait, and eventually price returns and sweeps above the previous high, this time forming a textbook shooting star. Right after, the market dives and breaks a local swing low. That's our cue. Momentum has shifted. Now we can enter using a fair value gap with our stop above the high and targets placed lower. Here's a reminder: never enter a trade just because you spot a candlestick pattern. You need structure, confirmation, and context. Otherwise, you're just guessing. For example, on this chart, we see a strong support zone where price has reacted multiple times. We also spot a higher high forming as price closes above the previous swing. This indicates potential bullish strength. So what do? We wait for a retracement back to that support zone, and only then do we look for a hammer candle to form. Once we've got it, we wait for the next green candle to confirm it. That's our signal to enter, with a stop below the wick and targets set at higher resistance levels. Next up is one of the most reliable 2 candle patterns. Now, before we move on to the rest of the video, let's check out the Bitunix crypto exchange. One of the world's most advanced crypto exchanges when it comes to crypto futures trading. They offer the best and the lowest maker and taker fees. You can see all my wins and losses since I started trading with this exchange. If you want to follow my trades, just sign up with this crypto exchange using the link in the description below. And if you want to get in early on any crypto asset, just sign up and start using this Bitunix exchange because they are constantly listing the latest and most verified crypto assets or tokens that are set to explode in this bull run. They offer high standard security and even a huge trading bonus for new users. So use the link in the description to sign up and start using one of the best crypto exchanges, the Bitunix crypto exchange. Now, let's move back to the video. The engulfing pattern. A bullish engulfing setup starts with a small red candle, followed by a larger green candle that completely engulfs the previous candle's body, from low to high. Keep in mind, it doesn't have to cover the wick, just the body. This indicates strong buying strength as bulls overtake the bear's momentum. On the flip side, the bearish engulfing pattern is just the reverse. A small green candle is followed by a larger red candle that covers the body of the first. This signals sellers taking over and pushing the price down. Let's put that into action with a real chart example. Here on the chart, the price rallied into a resistance zone but failed to break higher after multiple attempts. a strong sign of weakening bullish momentum. Eventually, price pokes above the level, takes out some equal highs, and drops, breaking the previous low. That's our first red flag. Then it returns one last time to retest resistance. And this time, it forms a clean, bearish engulfing candle. The second candle completely wraps around the first one's open and close. This is our trigger. We enter a short trade at the close of this candle, place our stop loss above this high, and extend the target near support levels for profit. Now let's flip to the bullish side of the engulfing pattern. This time, the market is in a clear uptrend, making higher highs and higher lows. That's a sign we're looking for long trades. Our job is to first mark a key level of support. Looking left, we see previous highs that price broke through. This old resistance has now turned into support. For extra confluence, you can use the Fibonacci retracement tool. In this case, the support zone lines up with the 0.5 level, which adds more confidence to our setup. All we do now is wait for price to return and print a bullish engulfing candle. And when it does, we can take the long trade, the stop loss just below here, and aim higher for our take profits. Let's talk about one of the strongest three-candle patterns, the morning star. This bullish reversal pattern includes three parts: a large red candle, a small-bodied candle that signals indecision, color doesn't matter, and then a big green candle to confirm the shift. The middle candle shows that the bears are losing steam, and the third candle shows bulls stepping in with strength. For this pattern to be valid, that third candle should cover at least half of the first candle's body. It's a powerful sign of a trend reversal when confirmed. So how would you trade the morning star in practice? Imagine a market that's trending up, forming higher highs and higher lows. Eventually, price pulls back, but this could just be a temporary retracement. We watch closely as price dips into a previous resistance level that's now acting as support. We add confluence with Fibonacci tools as the retracement aligns perfectly with a key level. Then the morning star pattern forms clearly. Once that third green candle closes, momentum is shifting. We enter long at the close, set our stop below the low, and target the next resistance above. Now for the bearish counterpart, the evening star. This is the reverse setup, also made up of three candles. First a large bullish candle, then a small-bodied candle. Again, color doesn't matter. And finally a big bearish candle. This is a bearish reversal pattern that appears at the top of uptrends. It's a warning that buyers are losing control and sellers are about to take over. Let's see how the evening star looks in the real market. Price is trending up and we spot a significant high that hasn't been touched yet. That means liquidity is sitting there. And sure enough, price reaches up, grabs the liquidity, then immediately forms an evening star. That's our hint that a reversal could be near. Once the third bearish candle closes, we can enter short, stop above the high, and target lower levels where price is likely to head next. Here's the bottom line. Candlestick patterns are not magic. They're tools, not crystal balls. You won't win every trade just because you see a certain pattern. But when combined with smart analysis, key levels, and confirmation, they become incredibly powerful. Go ahead and join our Telegram channel and get access to high-quality, expert-curated trade signals every single week. But that's just the beginning. For those who want even more, our VIP signal channel delivers the most premium signals with even higher accuracy and more frequent trade opportunities. Don't settle for average trades. Join a community that wins consistently, so click on the link in the description below to join now and start capitalizing on the market like a pro. If you found value in this breakdown, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned, I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.